Market structure 2. In my last video, market structure 1, I already explained the three types of market structure: uptrend, downtrend, and the consolidating structure. I drew a diagram labeling the what? The uptrend and the downtrend, giving us series of higher high and higher low. And now I'm going to be showing you the real charts using the real candlesticks. Let's get down into it. What structure are you seeing on your screen right now? This is an uptrend. How do you know it's an uptrend? Because the market is giving us series of what? Higher high, higher low, higher high, higher low, higher high. How do you know a valid uptrend? You know a valid uptrend when market does what? Forms a new higher high by breaking previous higher high. Let me repeat myself. When market forms a new higher high by breaking previous higher high, you know this is a valid uptrend, and it keeps doing it. This lower high never goes below this previous what? Higher low. It will never go below it. But the higher high always what? Always breaking above the previous higher high. What did he do? Broke it. It's always breaking the previous higher high. That is how you know a what? A valid uptrend. What do you do in an uptrend? You buy. What's the law of the market? Buy when is what? Low. Sell when is what? High. In an uptrend, you know you are buying, right? Then what do you do? After giving us a new higher high, you wait for what? A retracement back. This is where you do what? You take your buy. The what? Higher low. The trend is your friend. Always follow the trend. It gives you high probability setup. You wonder why traders are profitable. They're always following the trend. Learn it. How do you learn it? You keep practicing it. Now you know what an uptrend is, right? Then look for a strategy that follows the trend. You keep doing that. Look for a strategy that follows the trend, whether a downtrend or an uptrend. Consolidating structure goes sideways, no clear direction. Don't trade that. Now, the new higher high, it keeps doing it, forming a new higher high. It broke it, forming a new higher high. Wait for a retracement, take a buy. In an uptrend, you buy. In a downtrend, you sell. It's that simple. When you follow the trend, you have high probability setup and good risk to reward. The trend is the railway track, and the price is the train. As long as the train stays on the track, it keeps moving in the same direction. Trading with the train is like riding the train instead of standing in its way. You know what happens if you stand in its way? You get crushed. Now, look at this. I told you guys about what? The market structure shift in my last video, when the market wants to change direction. If it's in an uptrend, you see a market structure shift, it means the market wants to start a downtrend. And when it starts that, what do? You look for a sell. How do you know a market structure shift? How I identify a market structure shift In an uptrend, I wait for it to break the what? Higher low. In a downtrend, I wait for it to break the what? Lower high. Break above it, the lower high. And in an uptrend, break below the what? Higher low. You know now this uptrend is not valid anymore. Yeah, market structure shift. Let me show you with this illustration. You can see forming series of higher high, higher low, higher high, higher low, higher high. Then all of a sudden the market does what? Breaks below this level, goes below it. They say, oh, then it couldn't what? Form a new higher high. Then you know this what? A valid market structure shift. The same for the downtrend. Going down, breaks above the what? Lower high, cannot form a new what? Lower low. They know this is a valid what? Market structure shift. The market wants to go in the opposite direction. Market structure shift works in the lower time frame and higher time frame. The only difference is the traps in the lower time frame. Look at it. This is the higher low. What did the market do? After breaking this higher high, form the higher low, form this higher low, then what? Give us another what? Higher high. Now what will you be looking for? You'll be looking for what? A buy, but all of a sudden the market went below this higher low. When it goes below it, it's going to form a what? A lower low. This itself is a market structure shift. If you want to know this is valid, you wait for it to do it twice. Look at it. This lower low. Now what the market do? There's a break of structure here, whereby forming a new lower low. Then you know this is valid. Then what do you start doing? You start selling. Wait for a retracement, the lower high, you sell. When you are buying, you wait for the what? Higher low, you buy. When you are selling, you wait for what? The lower high, then you sell. I'm repeating this thing so you can get it in your brain. Look, it keeps doing the same thing. See, break of structure, you can see, forming a higher low, then you sell. This one thing about the market, it gives you good risk to reward if you follow the trend. You keep doing the same thing till you see what? Another market structure shift. This is not a strategy. This is just me showing you market structure, the uptrend, the downtrend, and how it changes in direction. That's why I'm also teaching market structure shift. Get yourself a good strategy that follows the what? The trend. A downtrend. What does the downtrend form? It gives us a series of lower low and lower high. Lower low, lower high. An uptrend, higher low, higher high. Okay? The downtrend, the lower low keeps forming. The new lower low always go below the previous what? Lower low. It will keep breaking it. It's the lower high. It can't go what? The new lower high can't go above the previous what? Lower high. You already understand the trend. So you just need to know how to mark your what? Your higher high and higher low and lower high. Keep doing it. Look at the structure. Keep doing it. You see what? A market structure shift. This is a market structure shift. There's even an internal market structure shift. Let me go lower. Let me go lower. This is it here. This is the internal market structure shift. Yeah. This is good enough. It was selling. Now there's a market structure shift. In change in direction, what do? You wait for the retracement after the market has given you what? Let me write it. Higher high. Higher high. A retracement giving you what? The higher low. They find a buy. Just keep following the trend. Look for a good strategy that follows the trend. You wonder how traders are making it. This is how they are doing it. It's not that complicated. They got used to it. They master the structure. They have a deep understanding of structure. All these are phases. Phases you need to pass in order to become what? Profitable. Understand the structure. And it keeps happening like that and like that till you see. Just because you say market structure shift doesn't mean you need to keep buying forever for a very long time before you see another market structure shift. No. After this buy, there can be another market structure shift just here. You can see there's a what? Market structure shift again. I'm repeating myself again. Then what did you see? A retracement. The lower high. There is an internal market structure shift over here. Then a break of structure. But if you are the type that don't trust the internal structure, this is what? The external market structure shift. Then what do? You wait for what? A retracement, then a buy. Since it formed the higher high, you wait for a retracement, then you do what? You buy. You have a good risk to reward. You keep doing that over and over again till you see what? Market structure shift. If it's buying, keep buying till you see a market structure shift. If it's selling, keep selling till you see what? Market structure shift. Use a good strategy that follows what? The trend. Let's check this. I'm sure I'll still see a market structure shift here. You can see this is it. This is it over here. They need to start selling. I'm sure of it. That's just how it is. To start selling. You see? That's just how the market works. That's just how the market structure is. You need to keep practicing it till you get it. Till you become better at it. Juicy FX talking. You guys should subscribe to this YouTube channel. I'm going to be making more educational videos like this. Now, let me go to another word, financial asset. You can see. Now, I don't need to label it. You know what a downtrend is. This is a downtrend. You can see lower low, lower high. You see, below, what do you do again? You wait for what? A retracement towards the lower high. Use a good strategy. Keep doing it. You see, keep till you see what? A market. Let me go a bit lower. Let me go lower. Till you see what? You can see. Look at it. Selling. The retracement keeps going lower. Till you see what? A market. Let me go 30 minutes time frame. Think. You see, keep selling, going lower. A market structure shift as usual. When you see this, you know the market's what? Start going up, start moving up in an uptrend. Keep doing it. Uptrend. You see, always going above it. Uptrend, going above it. Wait for the retracement, buy. Going above it, wait for the retracement, buy. See, the market is always telling you what to do. We traders are just ignorant sometimes. And going up, even if you make a mistake, the first time you lose. You know the second one you will get it because the market is what? Moving, going up. You understand the structure. Do not go against the market, you see. That is how you become profitable. Just have a good strategy. Understand market structure. You guys subscribe to this YouTube channel. Stay blessed. Peace out. And I hope you learned one or two things from this video. And this will push you closer into being a profitable trader. Peace out.